excited to have Andrew Moor join us and set the stage for the day, set the narrative for the day. And as you know, Andrew joined Equitable as president and CEO in 2007. So he's been on the job for 15 years, and he's done a bang-up job, man. He has transformed the institution from a small trust company to now Canada's 7th largest Schedule I bank with a 65 billion AUM. And Andrew has worked, and this is why I'm excited to have Andrew on stage, he's worked hard and, as I may add, successfully, to position Equitable Bank as Canada's challenger bank and EQ Bank as a leading digital banking player. What is of great interest to me, and I know the room, is that Andrew has a keen understanding of global challenger banks and neobanks. And Andrew, like the CLA, appreciates the importance of leveraging technology and open finance to improve consumer and commercial services, which I know to everyone in the room is music to your ears. So with that, I'd like to welcome Andrew on stage. Give him a big hand.
Well, I'm super excited to be here this morning. Frankly, it feels like I'm amongst friends, and I think I am amongst friends, where we see many of the companies that we deal with, so many of them are you. So thank you for being here today. Thank you for putting up with listening to me, frankly, but also, thank you for your partnership over the years, which has really been what has helped drive Equitable to the, I think, demonstrable success that we've had. I'd like to give a shout out to my colleague Jordan Shaw, who put the slides together for this. I think he did a bang-up job, as always. Jordan's pretty fantastic. So I am going to talk a little bit about the challenger bank attitude. So unlike many of you, we are actually a Schedule I bank, the 7th largest bank in the country now. But I think we come to it with fintech and challenger genetics that are somewhat different than what you hear from the other institutions. And through that, we partner with many of you. So when we think about how a challenger bank comes to market, what it means to be a challenger bank. By the way, I grabbed the term challenger bank. Some of you will have trouble understanding some of the words I say because I'm an Englishman and I speak too fast and I mumble. But the good news about that is I spent a lot of time in the UK market because I have family in London and so on. So through the time that the UK government was sponsoring new banks after the financial crisis, I got to know a lot of the players there, so the Monzos and the Starlings of this world, and they were all using the term challenger bank. Frankly, we borrowed that term, shamelessly trademarked it for the Canadian market, and have been living on this challenger bank ethos for many years. Now, what does it mean to be a challenger bank? And to me, the nice thing about that is we get to define what a challenger bank is. Owning the trademark, we can say this is what a challenger bank is. But I think the first thing it is something that brings innovation to the Canadian markets and makes Canadians' lives better. So this delivering the best service, bringing innovative products to market, bringing things that demonstrably improve our society is the number one lens by which we think about the businesses we can do. There are ways to make money in financial services that just should not be done. They're just a way, I would say, for example, index-linked GICs. Why do index-linked GICs exist? I think the answer to that question is they're there to separate honest Canadians from their money by the big bank institutions. That is why they exist. And that's not, frankly, an acceptable product to have in market from my perspective. Now, that's a very provocative statement, and there are some people that would argue these things do have a place in our system. But I think we can all see there are things that happen in the financial services industry that probably shouldn't be happening in Canada. And we certainly try to, and it's an ambiguous kind of thing sometimes, make sure that our services really do drive some value. In order to deliver on that message, we have to have a culture that really delivers on the employee promise. Like, why is it exciting to come to work every day? And I think a lot of our employees are excited about the idea they're building a better kind of bank that does improve the society in which they operate. In order to get the capital to do all that, of course, we need to look after our shareholders. So we look to drive a 15 to 17% ROE. Pretty much every year we run kind of within those rails. If you actually look at the total shareholder return of Equitable Bank over the last 15 years, and you compare that to the total shareholder return of all the banks listed on the S&P 500 and on the TSX, we're actually #1 ranked over the last decade in that regard. So a lot of that's due to your help and your partnership, so thank you for helping us get there. But as I said, somewhat inappropriately perhaps, but in front of a bunch of employees, Jamie Dimon, you can eat our shorts, right? Kind of thing, in terms of you think we're outperforming the Goldman Sachs and the Morgan Stanleys of this world, and JP Morgan for that matter. So it's obviously a good business model, and it's working for us. So we're trying to drive change in Canadian banking to enrich people's lives. This is the mission that we come to work every day. So we not only want to help our own customers, but we want to be a broader influence in the ecosystem. And certainly the members of this association are very much part of that ecosystem. You may have great ideas. Hopefully we can help amplify your ideas or work as partnership to bring your ideas to market, because perhaps you only produce a piece of the value chain. That's very much how we think about working with our partners. And we built our business in the early years working extensively with the mortgage broker channel in Canada. That evolved and became a much more sophisticated channel over the last 17 years that I've been in the job. And then technologies come in, there's technology partners, all kinds of interesting things. The ecosystem today is so much richer than it was 17 years ago. There are so many more people you could call to try and partner with. So how do we deliver on the challenger ethos? Well, first of all, we need to have a decent cost of funds. Clearly, as we know, many of the larger institutions have large deposits sitting in checking accounts, earning 0 interest. How do we actually get these low cost of funds? And certainly, it's having a best-in-class digital infrastructure is a key element of that. This might seem like old hat to you, for most of you, because we're operating entirely in cloud infrastructure, on the public cloud, in the Microsoft Azure cloud, actually. But we are the only bank in Canada I'm aware of running core banking in the cloud. Now, many banks operate pieces of the system, and that is evolving and changing fast. But we've actually been hosting core banking in the cloud for, I think, 3 years now. Again, this is very much driven by our insights from visiting Europe, where even a decade ago, people were running in the cloud, and we've moved into that infrastructure. But it does mean that things like artificial intelligence and using the Microsoft tools, the Copilot tools, for example, become available to us because we're actually running in native cloud to start with. So it gives us a good cost basis, allows us to innovate quicker than many others could, from more traditional structures. And then based on that kind of digital architecture, then how do we deliver some great products, distinctive, differentiated products that build on this digital capability? So I mentioned we can move faster to market than some can. So the government came up with this new program this year, the first-time home savings account. We were the first bank in Canada to have the first home savings account. Again, it's having a little bit of an edge and time to market does help, because consumers are looking for the product. The next product that we have that's really kind of changing the world for us a little bit is the EQ Bank card. This is actually running on prepaid rails for different reasons. I call it the magic card. We actually have a strawberry edge on it. That's one of my contributions to the bank, is to think that the card would be better with a strawberry edge on it, although others are claiming it was their idea in the first place. So I supported a good idea. This card, though, when you go overseas, you're getting exchange rates at mid-market exchange rate. A friend of mine went to Europe and traded 300 euros on this card and his more conventional bank card, saved 10 euros on that same transaction. And you think about what you can do with 10 euros in Europe. I had a LinkedIn post about this, but I think you can rent a bicycle and cycle around Paris for 5 hours for 10 euros. I mean, that feels like pulling a different piece of plastic out to give yourself a bicycle ride around Paris. Feels like a good value. You can also buy a crate beside the Pompidou Center for those of you that are a bit more sedentary. So we're bringing these innovations to market and hoping that's kind of causing some kind of breakthrough and helping us. So we've, from a standing start in 2016, just to give you some sort of metrics, we've got about $8.5 billion in the EQ Bank platform and about 400,000 customers. Frankly, when we launched this bank, the EQ Bank, I was worried that nobody might show up, and who's going to deposit money with a digital bank with no branches in Canada that nobody's ever heard of? And of course, we've managed to change that mindset pretty dramatically over the period. And we really believe we're on a bit of an inflection point, and I'll talk a little bit about that. So having built a great digital solution, some, I think, market-winning applications, then how do we actually get out there and build that brand? And so, a brand is what people think of us. So the first point is to really deliver excellent customer service. I don't care a damn about, or don't care a rat's about call handling time in our call center. What I care about is that the customer's problem got resolved for the first time. They go away satisfied. That point of truth when they're calling our call center, they're going to go away and tell their friends that they had excellent service from EQ Bank. Doesn't mean that other metrics aren't important to people in the operational management side of the business, but as we're trying to build a brand, the experience every time there's a touch point with us, there has to be a point of belief that gets people to come back to us. We've got to win people's business against well-established, deep, capable banks, and in order to do that every time we touch our customer, we really need to be fantastic. And we don't always make that, we don't always do that, but that's the aspiration. It's funny though how you have these experiences though as you're trying to meet that aspiration. I was sitting in my office one morning and I get this email at 8 o'clock in the morning. Guy says, you guys screwed me over this and that and whatever, the GIC was this and your customer service people didn't do anything about it. And, oh, that's interesting. He left his phone number, so I called him back and he said, so right away, 30 seconds later, he said, who are you? I said, well, I'm calling from Equitable Bank. Well, who are you? I said, I'm the CEO of Equitable Bank. I'm just calling you back. He said, sorry, I'm just brushing my teeth. Could you give me 30 seconds? And then indeed, it was a GIC problem. We had screwed up, to be fair, but the experience of getting the call coming back, resolving the issue, within a few hours from there, as an elderly man who was obviously concerned about his GIC and not being able to get his money out of the bank, I'm sure he had good things to say after that. Sent me an email thanking me for that level of concern. And I think we've got close to 2,000 people now working in the institution. If all of us are operating with that kind of mindset, then clearly we can win, because it's hard to get 2,000 people all walking along the same direction. In terms of how we think about who our customers are, we're trying to serve aspirants. This is the way we define our target market. So these are individuals who are actively trying to create their own future, manage a better outcome for them and their families, consistently seeking an edge. So, our products don't charge fees. We pay interest on effectively what's a checking account. We don't actually issue checks, because checks feels like the dark ages, but we think about it as a high interest checking account. You can make payments, move money around the world really quickly and cheaply from this. And so these aspirants, typically, many of them, we think they represent about 13% of the Canadian population, and not all of our customers obviously fit right within the stereotype. But many of them are new to Canada. If you've got off your tail and moved halfway around the world to build a better economic future for your family, you're probably somebody that's trying to improve your life in many other ways and a good target customer. And typically you're in the 25 to 40-year-old kind of age group. This is an attractive demographic they're attracting. If you're unfortunate enough to follow the Toronto Maple Leafs, you would have probably seen this advertisements in their short run at the playoffs last year, because this is when we really pushed and started to spend a little bit more money on advertising. But really, we're trying to kind of create this tension that there are opportunities beyond the larger institutions. An amazing stat is that 80% of Canadians still bank with the bank that their parents kind of set them up with, right? So an amazing kind of truth in a category that, when every other category's changed, your parents used to go to Sam the Record Man and buy a record, and now you don't even think about it, right? And in banking, we're still doing many of these things in the same institution. Now, to be fair to the institutions, they've been competitive and evolved with society, but I think we definitely try to ask the question: are there better options? And certainly, we believe that EQ Bank, for many people, can be a better option than perhaps the banks they're with. So this advertisement, if you saw it, it really tries to sort of create that tension around looking for a better option. We came up with the logo, Make Bank. So that was kind of less take, more make bank, and we spent a bit of money on advertising. And we put it on the CEO's T-shirt as a kind of big marketing and expense. And many of our other people are happy to wear these kind of wear logos to try and promote the brand. There's a certain pride in what we're doing here. And then, in other categories, well, so it's always been a bit disappointing to me, frankly, that we couldn't purely launch as a digital play. So it is interesting when we're competing against branch-oriented outfits. They do tend to be some credibility as a branch to go into. So having a streetcar rolling down the street with our logo on it does seem to give some credibility that otherwise wouldn't exist. Similarly, actually, advertising on terrestrial TV or advertising during Hockey Night in Canada sort of suddenly seems to give people credit. Oh, this must be a real bank. Whereas if you're actually advertising on pre-roll in say, YouTube or whatever, it doesn't seem to have the same connectivity. So we're feeling that we get kind of a better bang for our buck in some of these things, which don't actually resonate particularly with me as where we would think our customers are, but nonetheless, it's a place where we're successful. And then, one of our verticals is actually we're one of 2 lenders in the reverse mortgage business. And so, again, we're trying to kind of build our brand here. You might have seen some of this advertising recently. And the insight here is that people that are thinking about a reverse mortgage don't actually think about themselves as being rich, but if they think about their house as being a store of wealth and the house being rich, it kind of makes a warmer appreciation of the value of the asset and kind of how they can use their house potentially to help them through what we think about as the decumulation stage of life. Where again, we think there's a huge opportunity in decumulation. We think generally Canadian retirees are not particularly well advised on how to use their assets to fund their lives. And so not only do we do reverse mortgages, but we also lend against life insurance policies that can help. Again, there's a bit of a tax arbitrage there that we try to deal with. It's the same rendition of the same ad. And then in order to do all this, as I say, while we might have 2,000 employees, we're a pretty small company compared to the large banks, and we recognize that, and we recognize our ignorance in many areas. So we need to partner with many other companies. As I think Gary told me that every single name listed here is actually a member of this association. So we're obviously amongst friends. And many of these people came to us through other linkages. So I think, we invested in Borrowell. We were one of the founding investors in Borrowell. We were trying to learn how to lend online with them and have had a great relationship with Andrew Graham and his team over the years. Borrowell introduced us to Portage, so we put some money into Portage. Portage introduced us to a whole bunch of other people in the fintech universe. We met Flinks in Montreal, who have provided a number of solutions to us. They provide our open banking solution to export data from our systems. They helped us get hooked up with Wise, which produces our international money transfer business. So all of these, these meetings and this kind of venue that you've got here today are how business actually comes together, and then we are able to build these platforms. So, all of these companies are people that we've known for many years. In fact, I think the first line of Portfolio Plus code was actually written in our office back in 1990 or 1991, and we've been partners with them for many years. Obviously, their products evolved and changed through the years. So, we believe in partnership. It's a fundamental part of our strategy. We know we cannot invent everything here. In fact, we don't want to invent everything here. To keep our cost structure low, to keep this passion about our customers that I talked about earlier, we cannot be doing all of these things, and we want to rely on the intellect and the insight of these other companies that have got deep domain expertise. I didn't put up the people that we're actually lending to. So many of you, we actually provide funding to. So those of you that are lenders in specialty, in specialist silos, we actually, we support many of you. It's a business for us. Mark Richter, Mary Poplinski's here, who works for Mark. We have a team focused on lending to smaller lenders. And there's reasons why we can't lend to some. So many of the MICs, the mortgages that they're lending on, don't meet the standards of B20, but we can lend to the MIC themselves, provide leverage against that. So sometimes there's a regulatory reason why we wouldn't be able to participate. But more often it's because it's a smaller sector, it needs deep specialized skills, and we're not the people to do that. A company that's more focused in their domain is going to be better than we are. We have the capital. We've got a decent credit understanding. If people come and tell us a credit story in an area that we don't understand, we can get up to speed well enough, but we don't necessarily have all the deep domain expertise that somebody that's working in that business 24/7 would have. So we can learn, do the analytics. And we generally believe that despite the growth that we've seen in this organization, despite the things that have been going on over the last few years, Canada's still lagging the rest of the world in providing innovation in many of these sectors. So, I think I don't know, what are we? Are we the middle of the second, or are we the top of the third? Who knows? But we've still got many years of evolution of this business, of the financial services business to go. Just kind of like to point out a few things that we have found. So just these kind of really sort of Cole's notes on if you're trying to lever your lending business and get funding from a bank, a few things that we found over the years that might be useful to keep in mind. First of all, we've found that many companies don't really have a good record of defaults and losses. That's really important to us. The PDs and the LGDs are really, really important. So really making sure you batten that down as you're building your business. Even if you make a few mistakes in the early going, let's be transparent, be clear with us why those things happen so that we can actually analyze it. Too often we find we're asking 3 or 4 different dimensions of questions to get to the answer. Sorry, I did write this down, now I can't read it, but document your lending policies. So make sure you document them, and when you change them, timestamp them, and make sure that you're looking at cohorts that are all comparable to each other. Sometimes people will say, oh, well, just ignore that group because they were operating under something else. We really need to prove that that was different. And so we're not going to just allow sort of cherry picking of a portfolio and say, oh, well, we'll margin against that because we assume the rest of the portfolio is like that. We'll want to understand why those things are distinct and different. Think about anti-money laundering. We're a bank. We just have to do it, and there's no bending on that. You know, some of the rules are hard to interpret why they actually are there and why they work this way. Don't fight it. Just go with the flow. Just make sure when our AML teams come in that we can you can show that you're doing the right thing. Third-party risk management. You can actually read B10. It's a standard we have to operate under with OSFI. So you can see what we're going to have to be able to prove to the regulator about why we're dealing with you. And our teams are actually, I think, pretty good now at kind of providing you a template of the things that we're going to do that show you how you have to operate. If you're going to become a critical part of our infrastructure, we need to be able to stand up in front of the regulator and say, this supplier, this vendor, this lender is actually following the rules that you expect of us. Use good auditors. Sometimes people say, well, I can't afford to have an audit. It's too early in the going. Frankly, you're cutting off your nose to spite your face. So and I don't think you necessarily need to go to the Big Four. But if you're using an auditor, make sure that auditor's got deep domain expertise in the type of lending that you're doing so that we don't have to question that. So, what process did you go through to select the auditor? If you're selecting the auditor based on price alone, that's not likely going to be something that's going to warm us up. And finally, be prepared to just think about the structures. So SPVs, I know they're a bit expensive to set up. It's much easier for us to lend to an SPV than it is to lend and margin a lending business alone. So kind of think about that as you're building a business. So I hope those are useful tips around how it's, we're a bank. We'd like to think we're a flexible challenger bank, but we can't move that fast. It's just the nature of the business. We need to be here through thick and thin. We've got rigorous risk management processes in place I'm not going to apologize for. But we do want to do business with you. We absolutely want to do business with you, and we want to make it easier for you to do business with us so that we can bring new services to life. And finally, and I know we're all on this track together, we all need to be leaning into the regulators to make Canada a better place, make financial services regulation better. I feel like I've been talking about open banking for 5 years. Well, I have been talking about open banking for 5 years. Manifests fail. We're getting no traction in Ottawa. But the more voices that are in there insisting that we create a more competitive financial services landscape, the more, at some point, the politicians have to listen to us. The bullshit we have to put up with in Canada and the lack of competition that's a result of some of this stuff is ridiculous. And it's not just open banking. It's things like, where the hell's the real-time rail? I want to get money into your accounts now, right? I want to get money to my friends now. I shouldn't be limited to $3,000 on an Interact transfer, which is, by the way, controlled by the Big Six. It's just not fair. The fees I have to pay on my Interact transfer, I think it's more than 40 cents a transaction. The big banks pay 6 cents. Why is it fair that a little bank like us is paying 8 or 9 times what the big banks are paying for an Interact e-transfer? It's just competition being inhibited, and we should all be upset about that. And it's holding back my business, and it's holding back your businesses. So to the extent that you're dealing with people that have got political influence, we've got an interesting political situation in Canada right now, we need to be demanding more competition. I think the way things are being framed right now is leave the comparative moats in place, tax the banks more highly so that we can fund our deficit. What's going to be best for Canadians is to create a more prosperous society by having a more productive society and a more competitive financial system that can allow people to fund their lives in the way that they want. So I know this organization is an important part being that lobbying mechanism. So thank you very much. I think I've overstayed my welcome by a couple of minutes, but it's not too bad in the overall scheme of things. Really appreciate your time, chance to listen. Many of our people are in the room with you all day, so please, if you've heard anything here that might spark some interest in dealing with us, we're keen to do business. Thank you.